Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. This week, we have a special guest on the show who will bring us up to speed with what is happening in the mortgage market, but better still, give us predictions for what is going to happen in 2024. Let's see.
Welcome to the Property Podcast. Thank you for joining us. This is the show where we take some of what we've learned on the front lines of property, doing it for more than a decade now, and bring it your way for free. And we like to bring in experts to help us as well, which is what we're doing today. And let's be honest, I think we all would have liked a bit of foresight about the mortgage market going into this year. So let's see if we can make that a reality going into 2024. And do stick around to the end for Hub Extra, where we've got one website to sort out all your Christmas gifts.
So it's time for our news story of the week now, and the headline of this story reads, UK landlord sell-off slows, defying highest rates in 15 years. So Rob, you've recently put together a YouTube video on this very subject, and if you've not watched that yet, head over to YouTube, it's Property Hub UK. Make sure you subscribe because there's loads of good stuff over there. But Rob, as you've recorded a video on this very subject, and we've got an update on this, which UK landlords are not selling off as fast as they were. Do you want to bring us up to speed of what's happening?
Yes, so this comes from data from Hamptons, which is what I talk about in the video, and they've just brought out numbers for 2023 so far, which shows that landlords have sold around about a third fewer properties than they did in 2022. But landlords have also bought fewer properties than they did last year, which means that on balance, landlords are still net sellers. So we talk about this in the video. We've reported it on the podcast previously. Every year since 2016, there have been more landlord sales than purchases. That hasn't changed this year so far, but the number of both is down, which I thought was interesting. Something else I thought was interesting is that a quote from Hamptons in this article is talking about the types of landlords that are selling, which is a little bit different from what we discussed previously, with it being mainly older landlords taking profits off the table. It says that most landlords cashing in are one of the 10 to 20% of mortgage investors who face making losses when remortgaging at higher rates. Typically, they bought low-yielding properties in the south of England relatively recently, or they've been aggressively maximising their leverage and extracting equity to grow their portfolio. So I don't know where the data comes from for most. I'd question whether that's likely to be the case, but I thought this was another interesting example showing how not all landlords are equal. So on the one end, you've got those who've got big profits and have been in it for a long time and they're getting out. On the other end, you've got people who've got themselves into trouble by being too aggressive or buying in the wrong place. And of course, most of us are in the middle of that. But this is an interesting data source. I'm sure they'll update it again next year, so we will keep you posted. It's no secret that 2023 has been a pretty chaotic year when it comes to financing. It's been the most bonkers year, in fact, in the mortgage market that I could ever remember. A lot of this, of course, has been fueled by moves in the base rate, which has increased 6 times this year alone. And not only have we seen rates on products increase as a result of that, we've seen lenders ramp up their fees as well, so they can at least try to remain competitive on rates. One thing hasn't changed though, which is Rob and I always recommend using a mortgage broker. They're up there with the most valuable members of your property team. And we've got one of our favourite mortgage brokers on the show today.
We have indeed. Yes, to help us make sense of this market madness, we've invited Kelly Rule back on to the show from Serious Finance. And if that name sounds familiar, it's because Kelly's been on the podcast quite a few times already. So we wanted to tap into her knowledge to bring us up to speed with what's happening now. But also, we pushed her to give us some predictions for next year. So you're definitely going to want to hear what she has to say about that. So let's kick off. Kelly, thank you so much for joining us today. Can you give us a quick overview of what's been going on in the mortgage market?
Hi, everybody. Thank you for having me on the podcast again. It's great to be here. The mortgage market has certainly seen fluctuations throughout 2023. And after 14 consecutive hikes in the Bank of England base rate, we are now witnessing a pause. And for the third month, we remain at 5.25%, which is great to see.
So the base rate seems to be staying put at 5.25%. And the fact that it stopped rising is, of course, welcome news to everyone. But has this had a big impact on products yet? Or was this already factored into the products that are on the market?
We are seeing daily improvements on products available in the market. The swap rates, which is how fixed rate products are funded through the money markets, are continuing to improve. And this means that the lenders can pass that saving down to their consumers. We are now seeing fixed rates in the early 5% mark for buy-to-let specifically, although the arrangement fees are still eye-wateringly high on these products.
What about general market activity? Are you seeing more applications coming through?
It's so refreshing to be busy again with deals that are stacking up on the numbers and stress tests, and all those deals that didn't quite work previously are now coming back to life. I'm sure this means that every mortgage broker up and down the country are now drowning in inquiries, but what a great place to be given the doom and gloom we were experiencing only a short time ago.
And are lenders making it easy for people to borrow? Presumably they're keen to be doing business.
Absolutely. And this is one thing that hasn't changed over the past 18 months. Lenders are liquid and want to lend. And it's been frustrating for them as well that deals weren't meeting the required stress tests. They have been shouting from the rooftops about rate reductions and criteria improvements to help with all of this.
So what should investors be looking for out there? What kind of rates can they expect?
So for limited company buy-to-lets, as an example, at 75% loan to value, then you can expect a low 5% rate on a 5-year fixed basis. However, as I mentioned before, the lender's arrangement fee is still high on these products. Most lenders are now offering a sliding scale on the fee, but as the fee gets lower, the interest rate gets higher. Us mortgage brokers source products for you based on overall cost of borrowing, and we factor in both the interest you will pay over the fixed rate period, as well as the arrangement fee that you will pay, either at the outset or by adding it to the loan. Even with adding that fee to the loan, you will pay the extra interest on top, but also that fee will still be outstanding at the end of your term, and this needs to be included in the total cost as well. At the moment, if you're a UK citizen and resident and are an existing UK property owner, then I would still run the viability of a deal based on a blanket 5.5% with a 5% arrangement fee. If the deal works at this level, then it will be a bonus if you can secure a deal more competitive than this at the time. If you're an overseas buyer, your rates may be slightly more expensive. So please do get in touch with your mortgage broker before you reserve a deal, just to make sure that the deal stacks up at the levels that you can expect.
As I said at the start, to stay competitive on rates, we've seen some pretty high fees being attached to products to compensate. Is that still the case now? Do you think it's going to continue, or are you seeing signs that it's starting to ease?
As I mentioned before, there is this sliding fee scale now with most mainstream lenders. Fees are as high as 7% with some of these lenders, which is crazy to think that the old normal was an average of 1.5, 2%. We have got lenders with options at 2%, but the rates are well within the 6% mark on these products. My prediction is that once we see a reduction in the base rate and the swap rates, that these 7% fee options will start to reduce down.
A question Rob and I get a lot is, should I go for a 2-year or 5-year fix? So of the fixed products, what's looking more attractive these days?
The 5-year fixed is still the most popular by a country mile. A mixture of reasons, but in the main, you tend to get a higher loan as the stress test is more favourable. And a lot of my clients have been investing for long-term capital growth rather than cash flow. They would prefer to finance on a 5-year deal, knowing that they don't need to worry about refinancing again for another 5 years.
Are there any particular good lenders or products that investors should be looking at to see if they're suitable?
For existing lenders, we do have one lender, wait for it, with a 10% arrangement fee, which is insane. However, this product does really come into its own for areas with lower yielding properties that may be stuck on an existing high interest rate. Perhaps they haven't been able to refinance over the past 18 months as the stress tests just haven't worked to clear the existing loan and there has been a large shortfall. The rate is really low on this product. So even though the 10% arrangement fee is staggeringly high, the serviceability on the stress test works out more in your favour, which means we can get a higher loan out on day one, which means we're more likely to be able to clear that existing loan for you.
Yeah, that's interesting. It's a very punchy fee. Presumably you'd be able to add that fee to the loan?
Absolutely right. I mean, when you look at the actual monetary figure of that 10% arrangement fee, obviously it depends on the size of the deal, it's high. But if you're really stuck and your monthly payments have rocketed and are continuing to rocket because the lender's standard variable rates are going through the roof, then you're in a really sticky situation currently. It could be a fix to that problem. Not all deals work on that level. Don't get me wrong. You still need to run the numbers, but there are still some deals that do stack. It tends to be London and South East assets, to be fair.
I guess this could be a bit of a lifeline to any mortgage prisoners out there, right?
Absolutely right. And it's those mortgage prisoners that these lenders are trying to help. That product is not going to be recommended to your average Joe deal that fits the majority of mainstream lenders. It is going to be those mortgage prisoners that are just really stuck. And if they can't get a solution, I guess their only option is to sell. And we really don't want that. And, that product does come into its own with those types of consumers.
If you know anything about our service, Property Hub Invest, it's probably that we secure you exclusive property deals at a discount. But I now make all my investments through Property Hub Invest. And what I value most is actually the time saving and having the care team on hand to deal with developers, mortgage brokers, solicitors, all the things that normally cause so much stress and take up so much headspace. Property investment will never be effortless, but having the expert team at Property Hub Invest makes it so much easier. If you're interested in finding out more about Property Hub Invest, just go to propertyhub.net/invest.
So, 2023 has been a pretty interesting year. But can we put you on the spot and ask about 2024? What do you see happening? That's what we all want to know. And can you start, if you're brave enough, with the base rate? What do you think is going to happen in the next 6 and 12 months?
Well, where's that crystal ball again? The MPC, which is basically the Bank of England's most important people, for those of you who don't know, they meet again on Thursday, the 14th of December, and the general predictions are that we will remain to freeze until early 2023. Nobody can predict what will happen from then on, but the likelihood is we will start to see a reduction as we continue through the year. Will we ever get back to what we were used to? No, I really don't think so. But I do believe that we will stabilise around the 4.5% mark, similar to that of the pre-credit crunch in 2008, 2009. And I'd like to see some movement on that towards the mid to end of next year, keeping everything crossed.
Well, I think we take it if that is what happened. What about products in general, though? Can you see any trends emerging next year?
Who knows what the new normal is going to bring? Again, this has been in a completely unprecedented time. I've been in the industry 20 years. I've never lived through anything quite like this. The fees that we've been talking about over the last 12 months, like we've been speaking about today, have now just become a matter of course. And it's crazy to think that that has become the new normal. I would like to think that these fees will become a thing of the past. I really hope so. However, what we have learned is that when there is a little bit of a stickier or a tighter stress test with property that perhaps is a bit slightly more lower yielding, these higher fee products have come into their own, whereas we never had that before. So I'm wondering whether maybe there will perhaps be a bit more of a simpler 2-product line, 5-year fixed with certain lenders where you'd have a low fee and a high fee. So then as a broker and as a landlord, you can then pick which one you want. The lower fee is likely to be the most cost effective, but the higher fee, you can potentially get some more money out, which might be really important to some people if you're wanting to try and keep some of your cash back for the next purchase.
What do you think will be more popular with investors? Riding the variable wave or getting on a 2-year fixed, hoping rates will fall further in the short term, or locking in with 5-year products for security?
I think the variable rates may start to get a look in, although the stress tests on these products are still really strict. Gone are the days when all variable rates were stressed at 5.5. Now, depending on the lender, they're all different. Some are stressing at 7%, some are stressing at 9% and onwards. Very rarely do we see loan to values getting anywhere near the 65% mark at the moment. I would hope that the stress test will start to improve if and when the base rate starts to reduce again.
Okay, so to bring this home, what we all really want to know is, will 2024 be a better year to buy with a mortgage or refinance an existing purchase than 2023 has been? Please say yes.
100% yes. We are already seeing significant improvement now. We're really excited to see what 2024 brings, and hopefully I can come back on the digital airwaves and update you all again early next year as to what the new normal is starting to look like. In the meantime, it's still business as usual for us here at Serious Property Finance.
Well, Rob, besides loads happening in the mortgage market, I think it was very good of Kelly to be brave enough to give us some predictions for next year. And as you said, if Kelly's predictions come true, I'll take that.
Definitely. I mean, if there's one thing we've seen over the last 12, 18 months is how quickly things can change. Things have changed for the worse very quickly. But we've also seen a couple of incidents where the market has been surprised by events and has overreacted, but then it's only lasted a few weeks and then it's come back again. So even when things do seem grim, they can change very quickly. So yeah, I agree with Kelly. I think a better year is ahead lending-wise, but with the market being so sensitive, I wouldn't be surprised if we had a couple of little shocks in there along the way. So as we said at the start, keeping an eye on this stuff, keeping informed, working with a broker, never been more important.
Well, thanks again to Kelly for being brave enough to give us those predictions. In a few weeks' time, Rob and I will be reviewing our predictions for this year. Brave or stupid, you can decide. And of course, we will put our heads on the chopping block again and make our predictions for next year in the not too distant future.
Time now for Hub Extra, the part of the show where we bring you that little bit more. And this week, Rob, you brought something that very nearly derailed this entire recording. We always didn't have a podcast today because we were so busy talking about this before we started. What have you got?
Yes, I made the mistake of opening the Temu app. That's T-E-M-U. And I would describe this as the world's biggest tat store, but cheap as well. There's so much listed here, so much stuff you never realised that you needed or wanted, but it's so cheap. And I believe this website sources directly from China, but you're just not going to believe the type of prices and the type of products that are available here. So, do you want a novelty cherry toilet brush? Of course you do, especially at £1.58. I mean, how are they making a profit on that? I do not know. Or shockproof matte iPhone covers for just £1.34. Absolutely nuts, these prices. Or hairbands, 50 of them for 87 pence. Any takers? Yeah, this has got all that type of stuff and a lot more, a load of Christmas novelty stuff as well. Now, I have not actually ordered anything yet, but I know people who have. So they have received their goods that they've ordered. And if you love a bargain or you love a bit of a tat shop with all different offerings, then this app is for you. It's worth just a look for curiosity, just to see what is going on in the marketplace right now and the type of things that are coming to market. But be warned, you might lose a bit of time if you start scrolling, because there's just everything you can think of is in this store. And Rob, before you ask, yes, I have sorted out your Christmas present. I've got you a adult wearable shark blanket, and yes, the hood is the shark's head. So I'm sure you'll be popular in your house after Christmas.
That is awesome. Very generous. Well, not that generous because you told me the prices, but still, I'm touched. And that is my favourite kind of shop. You know, the shops that have always got like the big Perspex boxes and mops and buckets and stuff piled outside. They've always got the most amazing stuff inside. So the fact that I can browse one of these without having to leave my house is awesome. Well, that's us done for another week. Thank you for listening. Let us know what you think. You can find us on all the socials at Property Hub UK. We've been talking news today, and remember, you can get all the latest news in our free weekly newsletter every Friday, Property Pulse. You can go and sign up for that at propertyhub.net/pulse. We'll see you again next week. Until then, have a great week. Bye-bye.
Bye-bye.